Good evening, everybody. Welcome to Home Buying in 2024. Oh my goodness, we are so happy to have you here tonight. We have the best professionals ever in the history of the universe here at Patelco, and they will be giving you the best that they got. We got a bag of apples, and we don't have one bad apple in the bunch. So welcome. I just want to let you know that today is National Vanilla Pudding Day. Yes, so you have to look in your kitchen closet and find that old vanilla pudding and whip it up tonight. And this is also, in American history, the first U.S. library was opened in 1803. I don't know about you guys, but I love the library. It is the best demonstration of democracy ever. So you guys, we're going to have some quick housekeeping rules. Please use the chat for your comments and toggle your chat so that you can talk to everybody. We want to be really inclusive here. Please utilize the Q&A for your amazing dynamic questions. And please understand that we cannot answer each of your very personal questions, but we have our team of experts. We're going to share our webinar and our email, and we will be at your service. Also, if the chat distracts you, please minimize them. And guess what, you guys? You will be getting a recording of this webinar. So you don't have to rush. You can keep your shoes off. You don't have to take any notes if you don't want to, because you will all be getting this dynamic presentation and a recording so that you can peruse while you're making your vanilla pudding. So with that, I would like to introduce to you one of my coworkers. She has been working at Patelco for 20 years. Oh yes, she was a child prodigy. I think she started when she was 5 and I was 6. Her name is Cecilia. She is an expert, and you guys will be delighted to have her guiding this ultimate experience for you. So Cecilia, take it away, dear.
Well, thank you, Veronica. I appreciate the introduction. Well, thank you, everyone, for attending tonight's webinar. Again, I am Cecilia Diaz, one of the regional home loan consultants, and actually have been with Patelco for 30 years, believe it or not. And I have been serving San Mateo County. I would like to introduce the rest of the panels. First, we have Jose Garcia, 20 years in the profession, and servicing San Francisco and Alameda County. Brandon Blaylock, 17 years in the profession, and serving Alameda and Contra Costa County. Erica Badger, 22 years in the profession, serving Alameda, Contra Costa, and San Joaquin County. And lastly, we have Joseph Vitullo, 26 years in the profession, servicing Sacramento, Solano County. However, all of us are able to serve all over California. Now, one of the most asked questions from potential home buyers is if it's the right time to buy. The right time to buy is when you are financially ready and it aligns with your personal and financial goals. There are also other things to consider, such as mortgage rates, the economy, home prices, and market inventory. I will talk about the mortgage rates and the economy predictions, and Brandon will talk about the home prices and market inventory. Now let's start with the mortgage rates. Mortgage rates are based on the following: your credit score, down payment, loan amount, property type, and property use. We are seeing the mortgage rates being stable compared to the past few months or even years. So this is a good sign. Now, regarding the future, when the Fed may decide to lower interest rates, the Fed committee is closely monitoring the inflation rate. Based on the last Fed meeting, the Consumer Price Index report, inflation is not increasing, so this is a good news. As of last month, inflation was at 3.4% compared to March, which was at 3.5%. The Fed would like to see inflation drop at 2% before they decide to lower interest rates. To get more information of the current economic data, you may visit bankrate.com or CNN Money. Now we'll hand it over to Brandon to talk about home prices and market inventory. Take it away, Brandon.
Thank you, Cecilia, and good evening, everyone, and thank you for joining us. My name is Brandon Blaylock, and I'm a regional home loan consultant here at Patelco. I'm sure many of you are aware market trends for home prices and inventory can heavily influence whether or not it's a good time to buy. Recently, we have seen a slight increase in home prices due to high demand and low supply. Experts have anticipated a slower rise nationally in home prices this year compared to recent years. California, however, had a big April. Here are some stats from the California Association of Realtors. Statewide median home sales prices exceeded $900,000 for the first time in history. Bay Area home sales are up 23% year over year, and Bay Area home prices are up 15.5% year over year. Active listings were up in 49 of 53 California counties, with San Francisco not being one of those counties. We all know how big San Francisco County is. New active listings are up in California for the fourth consecutive month by double digits. But as impressive as these stats are, housing inventory remains tight with more demand from buyers than there are homes for sale. But according to Bankrate, low levels of inventory mean that sellers continue to have the upper hand in the housing market. Mortgage rates have come down from their peak, but are still elevated, and steep home prices are dissuading would-be buyers. But if rates were to drop further, which we certainly hope they will soon enough, that would certainly spur the market for both buyers and sellers. But for you as buyers or potential buyers, it's important for you to be in the know and research current market trends on your own so you're aware of how the market is performing. Some good resources for research and stats are the California Association of Realtors, and you can access their website at www.car.org, and the National Association of Realtors at www.nar.realtor, and we'll put those in the chat if they're not already there. But given these market conditions that we're experiencing, if you're considering buying a home, it's important to assess your financial stability, the affordability of homes in your desired area, and whether or not you're ready for the long-term commitment of home ownership. It might also be beneficial to consult with a financial advisor or a real estate expert like the ones on this panel to get personalized advice about your situation. But always remember, the best time to buy a home is when you're financially ready and it aligns with your personal and financial goals. Do we have any questions in the chat? No? All right. Well, thank you everyone for your time. And now I'd like to hand things over to my colleague, Joe, to examine how you should prepare to purchase a home. Take it away, Joe.
Thank you, Brandon. Good evening, everyone. I'm going to talk about some of the important do's. So purchasing a home is certainly a significant milestone, and it's important to know how to prepare to purchase wisely. So for me, when meeting a first-time home buyer and discussing your home purchase, the first step, if you would, is to pull the curtain back, or imagine walking into a dark room. My goal is to turn on the light so that you can find a clear path to your home ownership goals, and then work together in order to build a path to home ownership. So what to consider? When preparing to buy your home, set a realistic home budget, home buying budget. Consider the location and the size of the home that's going to meet your family's specific needs. Is it a 3-bedroom, a 4-bedroom? How much is that going to cost you and your family and your monthly budget? I recommend that you learn about and know your credit history. Give yourself time to clean up any credit blemishes, keep credit in good standing by making monthly payments on time. One of the best places to find out about your credit score is to visit the website annualcreditreport.com. You can get a copy of your report, review it. If you have questions, feel free to give us a call. We'll be happy to help navigate through that credit report for you. So, one of the most important do's, meeting with your Patelco Credit Union mortgage consultant to learn about buying is a great first step on the path to home ownership. When we meet with you and discuss your goals, the step will help you to learn about understanding your current situation and know how much is your buying power and your purchase price. I recommend that you definitely do stay in touch and remain in contact with your financial professional. Budget for down payments, save for closing costs, take into consideration moving expenses. Miscellaneous costs always pop up, and it's important to be prepared for those. So I'll ask my panelists if there are any questions. I can take those at this time. All right, so then in order to talk about avoiding home buying mistakes, I'd like to pass it along to my fellow panelist, Erica Badger. Thank you.
Thank you, Joe. I appreciate all the great knowledge. My name is Erica Badger, and I've been with Patelco for 10.5 years, and I'm excited to share some very important information about the things you should avoid when purchasing a new home. One of the main things is charging up your credit cards. Why shouldn't you charge up your credit cards? Because they can negatively impact your credit score and affect the amount that you might be able to be approved for when purchasing a home. Solution to that, keep those credit balances low during the home buying process. As much as we all love buying a car, I think buying that house is more important. So buying or leasing a car, if you do that during the home buying process, it can increase your debt to income ratios, and it could definitely affect your ability to qualify for a mortgage. So wait until after the loan closes until you buy that dream car as well. Do not open any new credit card accounts. Any new credit inquiries can lower your credit score and create a possible red flag for your lender. So the solution to that one, avoid opening new credit cards or loans until after you close. Changing careers or quitting your job. Lenders prefer a stable job history. Changing jobs can delay or jeopardize your loan approval. Stay in your current job until after closing. Should something come up, please make sure you speak with your mortgage loan consultant and go over that with them. The biggest one is making any big financial changes. Any significant changes can disrupt the mortgage process. Hold off on all major financial decisions until after closing. As you hear, most of these items directly affect your credit and your loan and what you might be able to be approved for. Any big changes, make sure you speak with your loan officer before. Remember, being cautious during the home buying process ensures a smoother experience. Anybody have any questions about that before I pass it on? Awesome. Well, it is now my pleasure to pass it on to Jose, who will be going over the importance of getting your loan approved. Take it away, Jose.
Thank you very much, Erica, and my other colleagues for all this amazing information. My name is Jose Garcia. I have been in the industry for over 20 years and very proud to represent Patelco. So now that you have, once you are ready to make the plunge and actually start putting in applications for a contracts, for a bid for buying a house, I want to really just kind of illustrate the importance of having full credit loan approval. So what that means is that when you're fully credit approved, you have had your financial documentation, the portion of the loan that pertains to your income, credit, and assets, completely reviewed and signed off by the underwriting department. So it's a great way to eliminate a lot of the anxiety that comes with the purchase process. And it's also a way to provide a peace of mind, knowing that the bulk of the items that need to be cleared in order to close your purchase have been signed off, leaving only the appraisal, reviewing, pretty standard processing items to get you to closing and get you those keys in your hands. So what does that mean? That gives you credibility with sellers. Sellers typically want the highest and best offers, and real estate agents want to close the transactions in a very timely manner with as little hiccups as possible. So I get a lot of calls all the time from real estate agents and saying, hey, I got your approval letter. How solid are these buyers? If you're fully credit approved, meaning that we have signed off on everything, I can go to bat and say, we're done. We just need to get the appraisal. Let's get this done. Have a really good energy and confidence saying that my buyers are ready to go. So it streamlines the process. When we get a conditional loan approval, there might be 30 items on it saying, okay, we need to address A, B, and C. If we have 15 to 20 of those items already signed off, it just, again, makes the process a lot easier, simpler, providing peace of mind. Gives you negotiating power. So when you are fully credit approved and all your items are ready to go, you can negotiate shorter close of escrow times. Here at Patelco currently, we have an 18-day close of escrow guarantee, meaning that if you're fully credit approved, we will get your loan done in 18 days. And a lot of times, done right, we can surpass that. So that's very powerful because right now it's a very competitive market. It's hard to get contracts, contracts accepted. So that's a very, very big, powerful tool to help you put yourself at the top of the heap. And again, a competitive edge kind of goes, hand in hand with negotiating power. It's a very, again, competitive market. I lose deals all the time to people that are buying, cash offers. But again, buyers, they want highest and best offers. So if your offer comes in strong with the higher purchase price, having financing tied to that doesn't matter. And having financing that's already been completely approved credit, income, and asset-wise really puts you at the top of the competition. So if there are no questions, or if there are any questions regarding this portion of our presentation, I'm going to go ahead and open it up to our question and answer session.
Thank you so much, Jose. So there's a couple of messages in the chat. So one question was, is there any advice on buying a new home build? So it's really preference if you are looking to buy new construction or if you are looking to buy a resale. I think the biggest thing is just determining where the property is, and if it's within your budget. I think both options are great. It's just a matter of preference. I hope that answers your question. If you have additional questions, we'll definitely open it up where you can talk to a loan officer and they can provide some additional information. The other question was, how long should you be on the job when applying for a loan? So that's going to depend. So if you were in school previously and you have a job, then we may be able to use some of that education background. So this would be a great opportunity and a good example of where you would want to meet with one of your panelists, so they can basically go through your scenario and figure out what the best option is. At the end, we will be providing an email address, and so we definitely open it up so that you can send in your information so that we can contact you and answer that question. There's a couple of more questions on here in regards to equity lines. So we'll go ahead and respond back, and some questions in regards to down payment. Will any of the panelists, do you want to answer the question regarding the down payment?
Sure. What's the question? I'm sorry, I'm not looking at it.
It's okay. What options are available for down payments?
Oh, there's there's several hundred probably down payment assistance programs. Depending on where you live, I would advise checking in with local city and county agencies for their specific down payment assistance programs. If you're looking in Alameda County, for example, there are quite a few AC Boost. City of Oakland has a mortgage assistance program. State of California has the Cal HFA or Cal HAFA for the down assistance program, which we participate in as well. There's also the WISH program through the Federal Home Loan Bank of San Francisco. There's numerous down payment assistance programs that you can apply for. You just have to meet their requirements. But definitely, like I said earlier, do your research. Check at your local city and county agencies, state agencies, and they're going to have all of that info for you. Or you can check in with us, and we can point you in the right direction.
Thank you so much, Brandon. The next question in the chat is in regards to how long does a pre-approval stay in effect? Erica, did you want to go ahead and take that one?
Sure, I can definitely help you with that. So our pre-approvals are good for 120 days, but if we're actively looking, we can get them redone and restarted to keep it going longer. So you just need to make sure you keep in contact with your loan officer to let them know what you're doing and where your steps are and everything, and we can obviously keep going. The credit report is normally good for about 90 days, but we can always get a new one if we need to.
Thank you so much. The next question is in regards to purchasing a second home, and if they can use VA to purchase the home. So did you want to take that question?
You're on mute. Joe, you're on mute.
Thank you, Sue. Okay, so Patelco Credit Union has options for you to be able to purchase conventional FHA, VA, and USDA loan program. So I noticed on the chat that there was a question about California residents buying out of state. Patelco Credit Union offers out-of-state loans. So if you're considering purchasing a home and you have questions about a specific program, it's strongly recommended that you contact a mortgage consultant and speak with them, because more than likely we offer that loan program for you.
Absolutely. Thank you so much. The next question in the chat, I'll go ahead and take on. It's one of the easier ones. We'll give the panelists the more challenging ones. So this question is, does retirement affect a buyer's purchasing power? So retirement is the most stable income that we have today. So it definitely is considered stable income. Your purchasing power is determined based off of how much income you have versus how many debts you have, so your liabilities. So when qualifying, we would qualify you as we would someone that was still working. But it's definitely, we definitely encourage, our folks that have retired to take advantage of home buying. And so if you would be interested in getting qualified, we will definitely have you meet with one of our senior panelists, and they can go through and let you know what you qualify for. There's some amazing questions in the chat, so we really appreciate all of the questions. I think we are almost at the end, so we'll take a couple of more, and we will definitely make sure that everyone that sent a question, you will get a response back. And so if there's additional information needed, we definitely encourage you as you walk away from this webinar, if there's other questions, to continue to send those questions in. We just want to make sure that the information that we've gone over addresses your questions and you got all of your questions answered. So the last question is loan contingencies the same as a bridge loan? And I'm going to go ahead and see if Jose will take that question.
Absolutely. Thank you. Loan contingencies tie into exactly what I was talking about being fully approved. A loan contingency is something that says, okay, you have, let's say, 14 days to clear the appraisal condition that is the appraisal requirement, right? And if you can't clear that, you have to perform, or you can jeopardize your 3% deposit, right? It also pertains to financing, where we come in. If on your contract it says you have 14 days to clear your financing contingency, if you can't do that, you either perform or you jeopardize your 3% deposit. So that's the contingency issue. Now, bridge loan is completely separate, completely different. What a bridge loan is saying is that it's usually a temporary and very, very costly and expensive way to get financing because for whatever reason, you can't get regular financing. Those are very specialized, very costly loans that are used in very extreme cases, and I have experience with those and doing them, that are not cookie cutter loans that you can go and just get at any lender. So it's a very, very completely separate thing. So I hope that answers the questions. Please, anybody else on the panel, jump in, chime in.
I'll say that to Jose's point, that's the whole reason why you want to go through the approval process in underwriting upfront. Today is so competitive that if you write an offer with a loan contingency versus someone that goes in with no contingency, they're going to most likely choose that offer. So having that upfront approval in place allows you to close sooner. With us, it's as little as 18 days, but also gives you that peace of mind that you're fully underwritten. You know, you have the backing of your financial institution, you know, albeit Patelco, and you can write that offer confidently without that loan contingency in place.
Thank you so much. And there's some messages in the chat in regards to the recording. And so the recording will be emailed out. So you'll definitely have an opportunity to get the same information that all of our panelists have reviewed. And I think those
Kelly, actually, there's a few more questions in the chat I thought we would answer. I'm not sure if we had covered this, but there's a question regarding FICO. Is it true that credit score from 750 to 850 if there's no interest rate change?
I can take that question.
You want to answer that, Joe? Go ahead.
Sure. I'll answer that, and I'll answer another one that I found very interesting that I can relate to. Is it true that credit scores from 750 and 850, there's no interest rate change? That could be the case, but it also may not. The key is that when you're reviewing your credit with your mortgage loan consultant and you're interested to find out the pricing of the loan transaction to see how it affects interest rate, that you go through providing the information on the credit report by pulling the credit report, reviewing it, and seeing if the loan level pricing adjusters, which can affect an interest rate when offering a specific rate and term, will make a change. So when you meet with us, we will go through it for you. 750 to 850, good for you. You've got great scores. You shouldn't have any problems being able to get approved. Now, there was a question in the chat that I saw that said, what do you wish you knew when you bought your first house? I wish that I had paid a little bit closer attention to my mortgage consultant's advice. It wasn't on my first home, but it was during the transition to my second home. I did exactly what Erica suggested not to do. There was this beautiful green Pathfinder. I had to have it. I didn't consult anybody. I went ahead and bought it. And when it comes to your question about what do you wish you knew when you bought your first house, I wish I had somebody that had provided this kind of a forum that I could learn more about what to avoid and what mistakes not to do in order to sabotage my own purchase.
So we got a thumbs up. We have more time from Veronica. So I'm going to go ahead and put more questions out there for the panelists to answer. Here's a question from Selva. He is asking, or she is asking, I have two options: buy a new house with 3 bedrooms and 2 bathrooms, or buy a plot of land and build up my own home. Which one would be a better choice? Cecilia, you want to take
that?
Great.
Yeah, of course. Well, going back to what Callie stated earlier, really, we need to look at our budget, right? So first, I would ask myself if that budget is actually going to satisfy the type of property that I can buy that is already built. Now, there are a lot of things that can, as far as time and money, when you're trying to build a home, because I believe you have to shop for different contractors and get their bid to see how much it will cost you to build a property. So again, that's your own preference, I believe. If you assess and budget wisely, and also talk to a home loan consultant and also a licensed contractor to see which would be best suitable for based on your current financial situation. So I hope I answered your question, but you guys can jump in, anyone.
You know what, I'm going to add to that. I think that, that the reality is when you're purchasing a home, the biggest thing is determining, because there's two things you can't change. You can change pretty much everything about a home, obviously with cost. But the two things you can't change is you can't change, or I should say it's very expensive to change, is the floor plan and in the neighborhood. So those are the two things that you really want to make sure that you are in love with. Everything else you can adjust, you can change. When you buy a lot and you build, the advantage is you get to build it to your preference, to your specs. But with that, there's a lot of cost. And even with the ability to build to your specs, you still have to follow, obviously, county codes and things like that. And you really don't know really what that budget's going to look like, because it's going to constantly change, because prices change, inventory changes, cost of goods changes. And so that number may adjust pretty rapidly. Whereas if you buy a home that's resale, everything's pretty much included. And so usually when you purchase, assuming you've done all the proper inspections, you're just modifying and you're doing what you want to have, not necessarily what you have to have. So you have some flexibility with it. But the home itself is really up to you if you buy new, or if you decide to build, or if you decide to buy a resale. It's really going to be personal preference on what it is that you're wanting and what you are happy with.
And just to add to that, I believe if you are needing financing on building the home, most of the time, the rates on that would be higher than if you're trying to buy a home that's already built. So you have to keep that in mind. Which one is more important? So I would probably list the pros and the cons. But there are both good investments, and it depends on, a lot of factors.
Okay,
Thank
so one
you.
more question in the chat. I heard that getting pre-approved for a home loan takes a hit to your score, but also heard that if you do multiple pre-approval at once, it only hits you once. What's the time window of getting pre-approved? A week, 2 weeks?
I can answer that. Oh, go ahead, Joseph.
Okay.
Okay.
So one of the best resources is the CFPB, the Consumer Finance Protection Bureau. So you visit that website, it'll let you know that it is very important for a home buyer to have an opportunity to shop without the fear of their credit score being damaged. So as a result, you may review your credit with multiple lenders and feel confident that the only time that you're going to take that hit on your credit report is on the first inquiry for 45 days. So this should give you an opportunity to be able to shop with multiple lenders and feel confident about your home buying decision. I hope that answers the question.
Thank you, Joseph. And someone's asking for you to put that link in the chat. So when you get a second, if you can drop it in the chat, that'll be helpful for everyone.
We have a question directed at Erica. How do I find out ahead of time when the property taxes and assessments will be in various locations where I'm considering buying a home?
So property taxes are assessed twice a year. They're assessed in November and April. You will have supplemental taxes that you will get a couple months after closing, but you can always guarantee that you will have taxes due in November and in April. But you do have an option of putting that into your mortgage, where you would pay your principal and interest payment and your taxes and or insurance, or both, at the same time. So the payments are due twice a year. I hope I answered that question. Anybody else want to chime in if I missed the mark on that?
I would just say, like, if they're asking about how you can calculate property taxes for a specific area, I mean, general rule of thumb for most areas is we use 1.25% of the purchase price. That'll give you the annual tax rate, and then divide that by 12. That'll give you your monthly rate. There are cities that have Mello-Roos tax, which is an infrastructure tax, like Oakland has it. I believe Manteca also has it, where the percentage is calculated at about 1.45% of the purchase price. It's a little bit higher to account for that Mello-Roos tax. But yeah, you can even look up the county tax rate, just Google it, and that'll give you an idea on what that property tax rate would look like potentially on a potential home that you want to buy.
Thank you. There's, thank you, Brandon and Erica. There's a couple of questions that are pretty consistent in the chat in regards to the process, the checklist, and kind of summarizing. So what's the checklist? What's the process? When do you start the process? How do you know, which realtor to choose, which inspectors to choose? So here's where I would leave, or here's how I would answer that question. This process, this journey is a process. It's a journey. You're purchasing a home, and you have a group of individuals on this call that will walk with you through that process. We wanted to, provide you some of the information that you wanted. So we covered quite a bit. Nowhere do we expect you to be super familiar or to remember every single part of the presentation or the process. We welcome you to reach out, and as you're going through the process, we are going to go through it with you. And as you're going through the various phases, first process is determining if you're ready to take that first leap, to see if today is the right time, or to start preparing for, the next 3 months or 6 months, or when you're ready. And that conversation starts with your loan officer. Once your loan officer meets with you, they're going to ask you a series of questions to determine, if you qualify, what you qualify for, what is it that you're looking for, and then they will help you through the next step. So yes, there is several websites that we've called out. There are several resources we called out, but that's just if you want to further discuss and further review. But I want to just let you know that we welcome the opportunity to meet with you individually to figure out, what it is you qualify for, if you should go with a fixed loan or an ARM, if your income is going to change, if you decide to purchase that vehicle, your qualifications change if you decide to, purchase that vehicle or not. And so I've seen several messages that look pretty similar, and I just wanted to just, answer that. And for you to rest assured, we absolutely want to walk through that journey with you and answer those questions as you're going through, and we will help you through the process. You don't do this alone.
I just wanted to add to that, Callie, like as far as getting a realtor, if you don't have one, a lot of us loan consultants have great relationships with realtors and would put you in the right direction with a realtor that we would trust and that we know would take care of you. So don't feel that you're on your own with having to even find a realtor. All of us work with many amazing realtors that would be able to share that with you, multiple of them, and you could interview and vet them yourselves as well. But know that we, like Callie said, we're always a resource for you guys in any way.
There's a question in the chat that I would like to direct to Cecilia. See here. Do you recommend using a mortgage broker or going directly to an institution like Patelco? Cecilia?
Oh, definitely I can answer that. Well, there are two things, okay? So going with a lender, a direct lender like Patelco Credit Union per se, or any credit unions or even banks, I think is a good start, because for you to be able to learn the step-by-step process instead of going to, because brokers could be good as well depending on your situation. So both could be good depending on your situation. However, I would prefer for you to go directly with a credit union or a bank, because we're able to give you step-by-step and guidance, and not just someone who will actually recommend a lender for you to apply and get information from. Because when you go and talk to one of us, we're able to assess your current financial situation, and also be able to give you options, and also let you know directly with transparency what information you need to know in order for you to prepare you for this big step. So hopefully that answers your question. Unless
Yeah, and I
someone
can
would
add
like
to
to
that as
add
well,
to it.
Cecilia. Yeah, because, you're absolutely right. Having a relationship makes a huge difference when you're making a home purchase decision. But it's right after you buy your home that becomes the process of owning that product for 30 years or however long that you're going to keep it. So when it comes to making a decision to going with a broker versus a specific institution, I'd say to you, fine, definitely do shop. Shopping is the key. But take into consideration the loan servicing part of it. Who is going to retain that? Is it going to be sold right after you get the mortgage to some entity that you were not working with? Or is it going to stay with your current institution that you're working with? And if you have a problem with the mortgage or the payment, you can walk into a branch and feel confident that you're speaking with a representative rather than picking up a telephone, being on hold for a very long time, and then getting frustrated that your questions are not getting answered. So I hope that's helpful.
That is helpful, Joe. And I want to add one more thing. And this is a good example. I've dealt with a lot of members who would come to me and say, my loan got sold and I couldn't get a hold of anyone. And I have a question in regards to my mortgage. What should I do? And unfortunately, the only way we could try to do it is for her to call and wait for at least a couple of, maybe close to an hour, just to get answers. So, and also look at the closing cost. I mean, Patelco, we have a minimal closing cost, only a lender fee of less than 1,000, where other banks and brokers, they may have some fees that you may just get surprised about. But with Patelco, we're very transparent. We could even provide you a loan estimate, so that you will know what to expect.
Okay, so there's a couple more questions in the chat that I would like to throw out there. So I heard in July there's going to be a realtor change or something where it'll be up to the buyers to discuss how much the buyer's agent gets. Do you foresee this driving home prices up or down after July? Brandon, do you want to take that?
Sure. I mean, the whole litigation piece is kind of contentious. it's I think optimistic from the side of a real estate agent's point of view. It's not necessarily going to be beneficial to say a seller's agent to not offer them, or even a buyer's agent, any piece of the commission, because the likelihood of the buyer's agent showing that property will go down. So I think you'll see that buyers and sellers and their agents are still going to continue to negotiate whatever that commission fee is going to be. But the expectation is that prices are most likely going to continue to increase. I would say probably for the next couple of years at least. Home affordability, according to the California Association of Realtors, is going to stay relatively flat. So I think as rates do come down, obviously if there's more demand out there, that's going to help a lot. But if you can buy now, honestly, it's the time to do it, because with less competition out there, your chances of having an offer accepted are higher. Once rates come down, there's going to be, a lot more demand. There's going to be multiple offers again. So it could be harder to have your offer accepted, but I think we're going to see, the affordability stay relatively flat, but at the same time, still see prices tick up. I don't think it's going to be a crazy increase, but it'll still be slight and gradual as it was this year. Anybody else jump in if you'd like to, or have anything to say about that?
Yeah, I'll jump in as well. And also, the commission has always been negotiable. And this is a conversation that I've had with multiple of my real estate partners, specifically here in San Francisco. That it's always been negotiable, but there's always been kind of this quiet. All right, the seller's going to pay 6% to sell this house. So what that's going to change and do is now you as a buyer, you're going to have. This is how it might happen: is that the buyer is going to negotiate up front with their agent that's representing them how much they're going to pay that agent. That's how they're seeing it. It's not complete in effect right now. One of my agents thinks that it might have a negative effect for buyers specifically, but it remains to be seen. So it's kind of like we'll see how the chips fall, basically. But overall, it's something that always could have been negotiated. And you see like something like Redfin, a company like Redfin that was saying, okay, 1%, so it was always there. It's just now it's like, okay, on the open, no, this needs to be negotiated up front. It's not just a standard 6%. So that's what I thought out there.
Okay, so we have another question. Can you stack home loan assistance programs?
Yes, you can. There are multiple programs that allow you to overlay with a different program, even sometimes 2 or 3 of them. It just depends on the program guidelines and what they will allow, but typically with the community down payment assistance programs, you can stack various down payment assistance products, behind one another, in addition to the first mortgage, of course.
That's right, Brandon. And sometimes that depends on the specific grant or down payment assistance program. But currently, Patelco is working with the California Housing and Finance Agency in order to provide down payment assistance. And we are working with the WISH program, which is through the Federal Reserve Bank of San Francisco. The Workforce Initiative Program offers you assistance and allows you matching funds. So yeah, absolutely. Using the down payment assistance program and layering them can definitely help you to keep your costs and expenses lower.
And I also will add one thing to that. I've partnered for, I don't know, probably 15 years with A1 Community Services in Hayward. It's a nonprofit organization that's a one-stop shop where you can do most down payment assistance programs require a home buyer education certificate. So they offer that, but they also have all the ins and outs and on all the products that are available. It is pertaining to Alameda County, but some of them are like Calhfa that Joe just spoke about that are statewide. So I will put that their email or their website in the chat. So it's a good source.
Great. Veronica, how are you doing on time?
We have maybe 2 more questions, and then I think we can end this fascinating discussion.
Oh, wonderful. Okay, so let me pull a few more questions here. Let's see here. There was a good one. Okay, here's one. Is there any specific way to improve credit scores except not opening a new account and not applying for new credit?
I'll answer some of that.
Thank you, Erica.
Yeah, no problem. So a general rule of thumb is you don't want to go above 35% of your line. So whatever 35% of your limit, you want to make sure you stay under that. That will help keep it lower. Using it and paying it off, make sure it bills the cycle and it pays off. That's a great way to boost your score. And no late payments. Make sure you pay everything on time. Anybody else have anything to add?
I think those are great suggestions, Erica.
Okay, here's a renovation question. Is it smarter to buy an older house and renovate than buying a house that already has renovations? Don't you pay property taxes on what you purchase a house? Is it better to buy a house that's $800,000 and add $200,000 in upgrades than buying a renovated $1 million house?
Well, can I answer that?
Sure.
I can answer that. Can you hear me?
Yes, go ahead, Cecilia.
Okay, so if I get the question correctly, the question is, should I purchase a home that is $800,000, but there's a lot of renovation that I need to do, or $1 million, but it's, basically there's not much work that you need to do. Is that correct?
That's correct.
Okay. So again, I go back to your current financial situation. So there are some where they actually like doing buying kind of like a fixer upper, but the only downside on that is there's what you call inspection and appraisal. Okay. So when an appraisal inspects the property, you want to make sure that there are no safety or hazard issues, because there are lenders' guidelines when it comes to assessing that appraisal report. So just make sure that when you're purchasing a property that needs some love, that you need to make sure that there are no safety issues. And also, some of my buyers who actually bought a property that are fixer uppers, they actually find someone who are licensed contractors who will give them a good bid, or let them know how much they need to have in order to fix everything or renovate whichever you want in the home. Now, location is the key. Also, I feel that if you're buying a fixer upper, most of the time, when you're buying a fixer upper, they are in a really good area. Yeah. And like what Callie said earlier, it's, you can change everything inside the house, but as far as the location, that's what we cannot change. So the key is location, location, location. So even though it's a fixer upper, but you're happy with the area, then why not, right? Now, buying $1 million and not much to renovate or fix may be a good thing as well, because you have to look at how much you're going to spend with just fixing the home, or how much you're going to save if you don't need to fix anything. But again, it depends on your preference. It depends on how much work you need to do, and also it depends on when the timeline, and also when do you see yourself living in that same property. So it really depends on a lot of factors. So that's when I always, personally, I always write the pros and the cons whenever I try to decide something. So hopefully that.
Did anyone else wanted to add to that?
I went through a remodel process. It was definitely difficult because we had to remodel the kitchen. So I had the stove in the living room and cooking in there, but it lasted for a couple of days. And then after, I ended up with a beautiful kitchen and definitely a greater value to my home. So I think it just depends on your tolerance and what you want to have. If you like walking into a brand new home and seeing everything done for you, and you don't have to worry about fixing things up, then great. Take into consideration your budget, take into consideration your family's needs, speak with your loan consultant about your financial situation, and we can help you to determine whether you need to buy a fixer-upper, or maybe you can just move right into your dream home without having to fix anything.
Great answer. So we are closing up, and Cecilia, you want to take on the last remarks?
Well, thank you, Sue. I appreciate that. Thank you, everyone. Thank you to the panels, and thank you to those who actually took some time to just be with us tonight. So again, this concludes our webinar presentation, and we hope that we provided you some valuable information. We look forward to hearing from you, and we're here to help you reach your financial goals and be a part of your home buying journey. We also would like to let you know that we have other products and services, such as home equity loans, consumer loans, investments and insurance, and some financial wellness. If you have any questions or would like to speak to any of us, feel free to contact the email provided on the screen. Thank you again for attending, and have a great evening.
Thanks for watching. You want more financial education? Well, make sure you just hit the next video here. And how about joining us so that we can continually give you good financial support? Hit the subscribe button because we want you here.